Representatives from the United States and China met for a second day in London to negotiate on tariffs between the two nations. A reminder, U.S. tariffs on goods from China currently stand at 30%, while Chinese tariffs on U.S. goods are currently 10%. And while the two sides haven't made any official announcements, U.S. Commerce Secretary Howard Lutnick told reporters that talks are going well and the two sides are spending lots of time together. Here to talk more about those negotiations and much more is CBS News MoneyWatch correspondent Kelly O'Grady. Kelly, good to see you today. What can you tell us about how these talks are going so far?
Well, first, I can tell you investors are very eager to hear how this all sort of shakes out, as are businesses and consumers. But this is the thing. I mean, this is why you're seeing the market tepidly optimistic, but pretty much flat today, is we don't have any concrete resolution. We don't have any sort of concrete data about what both sides are talking about inside those rooms. And, you know, we do expect these to last over the week. And so, yes, it is a very good sign that both sides are talking. And that is a lot of investors are taking heart from that. But we're getting different reads from both sides in terms of how they're going. The White House, the U.S. seems to be very optimistic, touting that good progress is being made. The Chinese, however, are not sharing that same optimism, kind of being mum about what's going on in the room. That being said, it could be a negotiation tactic. You don't want to share what you're holding in terms of cards in any good negotiation. But specifically, I think investors, if there is something good or bad that comes out of it that is very concrete, that is when you're going to see the market react in a big way, Mugo.
Okay. So I also want to ask you about this because while the U.S. and China, they're obviously still negotiating, a report from the World Bank released this morning is showing how these trade wars are affecting the entire global economy. So what is in this report?
So as many reports have come out of late, the World Bank is expecting global economic growth to be less than expected. And one of the big reasons why is all of this uncertainty when it comes to trade policy and less trade going on between a lot of these nations, especially China and the U.S., two of the biggest economies in the world. They're expecting global growth to only be 2.3% in 2025. That is down from earlier estimates. And I want to share a little bit of sound that was shared about this report, if we can play it.
Developing economies are facing a triple threat: high debt, sluggish trade, and mounting uncertainty. This year, 60% of these economies are going to see weaker growth. We are expecting growth to be around 3.8% this year, inching up to 3.9% over the next 2 years. These growth rates are well below the pace necessary to meet development goals.
Now, that was the deputy chief economist of the World Bank sharing a little bit about that report and kind of what we're expecting over the next couple of years. I don't want you to panic, Mugo, though, because just because these analysts come out with these reports, we have seen how quickly those estimates have changed. They could certainly always change back, and it doesn't mean that they're right. These are just estimates at this point.
That's true. No panic from me, I promise. So on the domestic front, we've got a new consumer price index report that is actually going to come out tomorrow. What are you expecting from that report?
So the consensus is that we're actually going to see an uptick in inflation. In the April CPI report, we saw inflation come in at 2.3%. It's been moving towards the Fed's 2% goal over the last few months. The May report, this is still backward looking, right? We're in June, is going to show likely 2.5%, so moving in the opposite direction. And the big driver is that we are expecting now to see some of these price increases from tariffs that companies have been saying they're going to pass along to consumers actually show up in that data. So we're going to be parsing through the report tomorrow to see what specific areas show increases versus decreases. But this is going to be a big input as the Fed meets next week and decides what they're going to do about interest rates.
All right, Kelly O'Grady, I know we'll be talking to you all day tomorrow, so thank you for your time and for tomorrow. We appreciate it.